Hello there, Kyle Wilson, Verico Finex Lending. Thank you for taking time to watch this video today. The point of this discussion is to show 3 ways that we can still afford property in the Okanagan. This might seem impossible given the spring of 2016 and how crazy the market might seem. It seems like it's elevating and getting more and more expensive, but it is still attainable, and I hope that I can show you briefly today. So my first step of recommendation, which might seem unconventional, and I look forward to hearing your comments and your feedback on this, given the Kelowna, Okanagan, Vernon, Penticton market, is I encourage you to buy a house with a suite. Don't buy a condo. This goes backwards from what the lower mainland economy might be showing or any other type of property in British Columbia. Yes, condos can be more affordable. And don't get me wrong, if a condo lifestyle is for you, that's not the point of this video. The point is to show what is more affordable to get you approved from the bank and to get you into a property or real estate for that. So looking at this example, we'll say a house for $450,000 with 5% down. After Canada Guarantee or CMHC insurance fees at 2.3.9%, your monthly payment of principal and interest is $19.59. Now, the benefit of a house in the Okanagan specifically is you can actually use secondary basement suite income. As of last fall, on September 23rd, CMHC now allows you to use up to 100% of that rental income to qualify for a loan. So let's say your secondary suite on that house brings in $1,100. That now reduces your mortgage principal and interest net costs down to $859, the difference of that. This is going to give you an opportunity to have less debt service calculation, get into a more affordable position, and find more value for property in that essence. To show the balance, the ends value of that in comparison, noticing a condo, let's say it's even half the price of a house at $225,000, which could get you a decent condo, maybe not everything you're looking for in the Okanagan. With 5% down, with your insurance premiums and everything at 2.39% on a 5-year fixed term, it's $979. But here's the kicker. Mortgage lenders and banks require that you incorporate the strata fee, the cost to maintain that property according to the regulations of that place. So let's call that $350. Yes, some are $200, some are $400, some are $500. It depends where you're going to be living. So if that's the case, whatever that calculation is, we'll say roughly $350, your mortgage principal interest plus strata fees net cost is $1,329. So this example shows us that if you get into a property that has rental potential, you're going to save over $470. You get a full property with grass, land, everything included in that, with the potential for that to simply just increase over time. That's the first recommendation. In affording property in the Okanagan, right now it just simply makes sense to buy a chunk of land where you can rent out a portion of it and still live in it. The second thing I recommend is if you can't find a house with a secondary suite, renovate it. This seems impossible, but what I want you to do is think outside the box. Many people think that when you buy a house, you can't renovate it right away because it's impossible to find the money because you put your 5% down cash and that's all you could afford. However, there's a beautiful program that's still available right now. If you go to is.gd/improve, it's going to take you to my website under the renovating tab. And you'll see here it's called the Purchase Plus Improvements Program. This gives you up to $40,000 where you can customize a property to your taste. So whether you need to add a secondary suite, add a kitchen, adjust the bathrooms, make something on the property to be your own property, this program is going to allow you to do that up front. And you can go through all my steps on the website for the example on how it works. And I encourage you to contact me so I can help you find that right property. So this purchase program helps you get into a house right away so you don't have to worry about trying to find a property that has a suite already. You can make it your own, use that rental income potential, and get you into that right property. The third step, reduce your debt. This is obviously something that we all need to do in Canada right now. And the problem, though, is the debt service calculation. So with this scenario, the biggest challenge for people is that they simply don't calculate because of how their high interest auto loans are right now, their credit cards, their lines of credit. But what people don't realize is there is very unique programs that are out there right now. Interest rates have never been lower. So if you're paying 8%, 9% plus percent on an auto loan, even 7, credit cards at 20 plus percent, there are so many simple ways to consolidate that loan into a simple interest to make it more affordable. And I encourage you to contact me on that as well. Even if you're not looking for a property currently, I can help you find ways to bring that debt load down so you can calculate for future better debt, not consumer debt, but real estate potential. So that's the third step. Thank you so much for watching this video. I encourage you to contact me as shown in this slide. Any questions you have about real estate or mortgage potential, whether you're even looking for a property right now or in the future, it is a good time to see. There is so many programs out there nowadays that people aren't aware of. And it is still affordable, regardless of the price of housing and how it's going to go. There still could be an opportunity for you to get in. So thank you so much for taking time to watch this, and I wish you all the best for 2016.